Hi everyone, this is Mark from StocksNCash. You may not know who I am, and you probably don't, but I've been trading stocks and options now for a few years. I would consider myself an intermediate in terms of knowledge, but probably only beginner in terms of results. It's kind of a New Year's resolution. I figured I would start documenting my analysis and what I think is going on in the market. So without further ado, here's what I think is going on. So I drew a Fibonacci retracement here from 1.9 to 12.29 to kind of figure out where this latest leg up could go in the bullish market. Excuse me. You can see at the 127 mark, we hit that target on Friday. Certainly more room to run up to the second target to 280. I don't have any technical reasons as to why we couldn't continue to run up, although you see down here the RSI is a bit oversold, but MACD is pointing upward. The Stokes are up again, overbought, and I'm sorry, RSI is overbought, not oversold. So yeah, I mean, it's possible we could move sideways a little bit. We could pull back a little bit down to the 8 EMA. But overall, I think we're going to eventually reach our target. That's what I'm looking for. So on to some individual stocks. Apple broke out on Friday. Not the strongest volume, but broken out nonetheless from its holding pattern over the last few months. The RSI is pointing upward, and the MACD has crossed and is also bullish. I like a target of 182.13 as the first target, and a second target of 189.59. So based on the last move and the consolidation is experienced over the last few weeks, I think we definitely have an opportunity to run up here. And it's a low risk trade. You can kind of put your stop at the low of Friday's candle here. And that's going to kind of be my theme for the stocks that I'll cover today. So moving to the next one, Beat. This stock has been in an uptrend for a while, pulled back intermediately, and looks like it's trying to resume its uptrend. On Friday, it had a nice, strong bullish candle. Again, not the strongest volume, but nonetheless, the candle is indicative of a strong move. I like a target of 34.14 and 36.42 as target 2. On this particular stock, I would not buy options. I took a look at the spread earlier tonight, and the option interest is only in the hundreds, low hundreds, and I like to see something that's in the thousands, so you have the liquidity to kind of move in and out as you need to. So I might buy maybe 100 shares or so, and again, stop would be below the low of the candle on Friday. Next stock I want to look at here is M. Sort of broke out on Friday, at least close to it. I don't know if you really want to call it a breakout or not. The breakout line I'm showing here is 244.19. The close was 244.47, so technically it did close above. I'd be wary of this particular trade given the candle and price action on Friday. That being said, I adhere to what's called in I think the trading world, the 5-minute rule. If you're not familiar with what that is, I can kind of show you real quick here. Go into the 5-minute chart. So you can see on Friday at 9 o'clock, we had a kind of a doji candle here. The next 5-minute candle did not close above it, and then at the 9:45 candle, we did finally get a close above the open. So that's kind of your indicator that, okay, I can get into this trade. You probably wouldn't have wanted to just because M hadn't broken out, but this is just an example. If a stock has broken out, you want to get in a 5-minute candle. This is how you do it. You look at the first candle, and wait for a close above the high of that first candle. Once you get it, you're good to get in. It doesn't always work out this way, but you can kind of put your stop at the low of the opening candle to reduce your risk in case the trade does move against you, which does happen sometimes. This is certainly far from foolproof, but it is a way to kind of determine a good time to get into a trade. The next stock I want to look at is PayPal. It's been kind of consolidating also over the last few weeks here. It technically broke out on Thursday. Friday kind of confirmed the continuation. MACD is up, bullish. RSI is a bit over bought, and stochastics are a bit overbought. But there's really no reason why it can't kind of keep on running up. I don't particularly love this trade because it's already kind of getting close to the first target of 82.27. But if you're interested in PayPal, you could get in a small position, and I would consider trimming at target 1 here, and then riding it up to 86.02 with a smaller position. A couple others I want to take a look at. Dunkin' Donuts. Everyone likes Dunkin' Donuts, I think. You can see I drew a fib from its recent high here of 66.44 to the low on 12.7. Dunkin' kind of pulled back down into the 50% retracement. It had a really nice strong candle bouncing off that 50% retracement. It closed over the 8 EMA, and I think this has potential to start running back up and continuing the trend that we saw over the last few weeks here. Certainly you'd want to make sure that it does actually close over the breakout line of 66.43, but I think it's a pretty low risk trade to get in now with a potential run up all the way up to $70. So that would be approximately a $6 gain. The low of this candle is 63, so you're risking about $1.50 for a $6 gain. To me, that's a pretty good trade if you're willing to accept that risk, given the fact that it hasn't actually broken out, and you're kind of relying on the Fibonacci retracement indicating a bounce. MACD hasn't crossed over, but it looks like it's trying to. RSI is kind of in the middle, a little to the high side, and Stokes are kind of resetting, trying to start another uptrend. So I think Dunkin's in pretty good shape. The last stock I want to take a look at today is Citi. It's kind of been in a wedge / triangle position, pattern rather. It broke out on Friday. The volume was decent, not huge, but decent. We see the MACD here has kind of gone bullish. We've crossed we've crossed up bullishly. RSI is pointing up, and the stochastics are pointing up. Very similar to Dunkin' here. You want to be careful of the breakout line, which is imminent at 77.83. But assuming that it gets through there, we could get to 79.64 and potentially 81.97. So again, it's kind of a low risk setup as long as you understand the risks with the resistance that are kind of overhead in these targets. But I think it's a pretty good trade setup. That kind of concludes my